All right. Okay, good morning, everyone. This is Dr. Chef, and this is Dr. Chef's Crypto. We are in a series called Crypto101, which is basically crypto basics, your basic training when it comes to crypto. And this is part 3, which is going to cover basic vocabulary. Good morning, and welcome to June 7th of 2021. Now, just before we get started, I am not a technical advisor. This is not financial advice. This is for entertainment education purposes only. So let's get into it. Now, there you are. You've got your security protocols in place. You've got your two-factor authentication. You're working with your computer, your phone, your notebook all at the same time. You are making sure that your investments are going to be secure, that your information is going to be safe. You probably even have a hard wallet that you'll be putting things in, especially if you're using larger amounts. Now, you've got your platform. You've decided on your basic platform, whether that is Coinbase or Binance or Gemini or whatever it is. You've got your wallet set up. You're ready to go. And now you're thinking about what you're going to do. What are you actually going to invest in? What are you going to use your money on? So you've looked at how you're going to analyze this stuff. What is your approach going to be? Maybe you're using technical analysis. You're going to look at your charts, and now you know what a candle is or what a chart looks like. Or perhaps you're going to utilize some type of fundamental analysis where you're reading the white papers and trying to understand the companies and what they're doing, and getting them aligned with your ideas about what you want to support. Or maybe you're doing sentimental analysis, and we call that also emotional or society based analysis. You're thinking about who's going on Saturday Night Live next, or what's going to happen, or what did so and so say about this, or how does this affect the market? Maybe you're using some kind of combination, but most of the time people are utilizing at least some forms of technical analysis. So we're going to need to look at some basic vocabulary just so you know sort of what you're getting into. So that's what this class is about. It's about basic vocabulary. So for instance, look at the screen that we're on right now. All right. You see over to the left side, those things all mean something. It's just graphics. It's just kind of sort of fun. But you see how there's this chart with this giant green line going up? This is a massive like spike. That's what we want to see. We want to buy in here, down low, and then we want to see this huge giant spike. Or see that little ribbon right there of bulls? So maybe you know what a bull versus a bear is. And of course you see the coins in the background. You can see Ethereum and Litecoin, and so understanding some basic vocabulary is going to go a long way. So let's start with crypto. What does this mean? The crypto or cryptocurrency, that's what crypto is short for, is a monetary system. Instead of being based in banks and centralized banking, it's a monetary system that's based in a thing called the blockchain. The blockchain, just like it sounds, is a chain of blocks. These blocks are information packets. They are large collections of data, basically concerning transactions, individual to individual, organization to organization, things moving around. This information is being tracked all the time by thousands and thousands of people and computers all over the world. And it is a um, really safe, really complex system. But basically, you can understand it like this: whoever puts there's literally no way that light is blinking. There's no way. I was just over there across the room, and the light was blinking, And so I moved over here, and now that light's not blinking and this one is. I don't know what to tell you. All right, welcome to the Briarhurst. Okay, so don't let that interrupt us. Let's focus. A blockchain is a chain of each of these blocks of information. The people assembling these blocks of information are getting rewarded for the speed and efficiency of their transaction tracking. This makes a system that is completely transparent. Anyone in the world, thousands, millions of people can see all the transactions. It's almost like if you were doing your banking and all your banking transactions were just visible to the world. So everyone would know exactly what was going on. If you went to get a house or car, it would be instantaneous because they would look at everything and see everything going on. It would be very clear and very transparent. People themselves aren't the issue. The large institutions are the issue because giant institutions are not transparent. So your money and how it's moving around and how it's being used in the world is being done in a very um, clandestine, non-transparent way. Most people don't realize this, of course. They go to the bank, they deposit their check, they go get cash out of the ATM, and they don't really think about how this system works. They don't really think about the fact that the money in their wallet is not being backed by anything except the word of the government. They're not understanding that the money that's in the bank isn't real. That if everybody went to get their money out, they couldn't get it. There's many, many, many times more money listed in the bank than is actually in the bank. So this is quite unusual and bizarre, but people don't know that. But what cryptocurrency is a alternative system, an idea of how to create a new monetary system that's super transparent, super safe and secure, and everybody can see everything all the time. So, that's the basics of what we're talking about. Now, within that space, there are a variety of different coins and a variety of different tokens and a variety of different ideas. And this is the next stage of your information. So understanding what Bitcoin is, for instance. Bitcoin is the first cryptocurrency. It is the um, cryptocurrency that uses proof systems and miners and all these subterms to create this new cryptocurrency world. And that's why it's worth so much. That's why it's so stable. That's why it's so unlikely that it's going to ever go away. It's sort of what we call the OG of the crypto world. Right behind that is another system called Ethereum, and there are other ones, Litecoin, Cardano, etc. And these range from very large, very stable systems worth billions of dollars to all the way to meme coins and fun things and things that are being created just on a whim or just for a certain little project here and there. And your job is to try to figure out of all those things what you're into. And so the next thing we need to talk about is the idea of you using this for your own purposes. So, for instance, are you trying to make a lot of money fast? Are you trying to come up with a long-term investment strategy? What are you doing yourself? Basically, once you can analyze everything, which we've already talked about the three ways to do analysis, once you can analyze everything, your next move is to figure out what you want to do. Who are you? What do you want to do? If you're looking for a stable long-term investment, just similar to the way somebody would use gold, for instance, You can find that within cryptocurrency, and that stability or the ability to grow over time slowly is a very apparent and very common. It's a use case for a lot of the more powerful coins. These things like Ethereum or Bitcoin are not going to suddenly, jump 1,000 times. They might, that would be amazing, but more than likely they're going to go zigzagging their way up over time, and you're going to make money like you would investing in most companies, which takes time to grow. If you're looking to get in and out, we call this is, like I said, this is basic vocabulary class. So we call this idea pump and dump. Pump and dump is the idea that you find something that you think is going to spike very soon in value. You pump money into it, it pumps up. You get a 10x real quick, you dump it, and you make your money. Now, this pump and dump strategy is a strategy that a lot of people use, and what's going to be required for you to do that is a whole lot of research, multiple computers, and a lot of time. Because what day traders do, the reason it's called day trading, another vocabulary term, is because it's their day job. Day traders actually have this as a job. They sit there with the computers, with the analysis, with all that stuff happening, and they track it all, usually using technical analysis. They're watching things going up and down, and they're tracking it. What they're attempting to do is catch lows and highs. So things come in, they drop, they think that's a good bottom, they buy in, they see it spike up, they pull out. Now this can happen within minutes. So you really have to be at your desk paying attention. Now, most of us don't do it that way. We do longer term things. And I'm talking about longer term as in day or two or three. Take a week or two to analyze something. This is a longer term strategy. And then very long termers that are basically sitting there with their money in a position for a long time have done a lot of research and decided on this position they're going to take with whatever company. Now, we have a nickname for people that hold on to stuff. It's called hodlers. HODL stands for hold on for dear life. Hold for dear life. So hodling. This is somebody that's holding on to a coin for dear life. They're thinking that this is going to be a very good long-term investment. So people can move at different speeds. So my point of this section is you need to decide your speed. Are you going to be on it all the time, watching it all day, have it be a job, moving money? You can do this and make money. People do it. Thousands of people do it all the time, where you can put money in and pull money out very fast in many different trades during a given day, and you can make a salary. Today I made $1,000. Today I made $10,000. Today I lost a couple dollars, whatever. But the average over a period of time would be a good salary. You can live like that. So this is the employment of yourself as a day trader, as a professional crypto analyst and trader. So we've covered hodlers, we've covered long-term, short-term, medium-term, people dealing with things in a single day, people dealing with things in a single hour, people dealing with things over a period of years. The reason for most of the volatility, which is another word, the word volatility refers to the ups and downs. And you'll see right now we're in a very non-volatile time. Right now things are in what's called a range. We're going to talk about those kind of vocabulary words in a minute. But volatility comes from the fact that so many people are coming in and out. They're trying to pump and dump everything. They're coming in and out of stuff all the time. Large positions being held in the millions and billions of dollars by large groups or large individuals. These people are called whales. People that come and go in large amounts. That's another vocabulary word for you. But the pumping and dumping action of speed whales is what causes volatility in the market. So things are coming and going. Now, that's not bad necessarily. If you can learn to track it and you can figure out when people are going to come in and come out, then you can track that information and get a lot out of it. So these are some of the vocabulary words. Now, let's talk about bull versus bear. You'll hear a lot of people say bullish and bearish. Okay, so these are very, very common terms, and I don't really know that much about where they came from. That's probably a stock market historical research piece of data I'll do in the near future. But bullish means you're positive about something, you think something's going up. There's a good sign for it to rise. It's in a bullish pattern, or you're very bullish on a certain thing. It means you're positive, or you think it's going to move in a positive direction. Bearish, or a bear market, means it's moving in a negative direction. Now, you have to have bulls and bears in your life. You have to be bearish on some things. If you're bullish on everything, you're just going to lose a lot of money. If you're bearish on everything, you're not going to make any money. So, whatever. You're going to have a mixture. You're going to have to know about bears because you need to know when things go down so that you can buy lows. So, bulls and bears are the terms we use for the idea of how the market's moving and how we feel about things. That's why I have a little band right there, as you can see. You can see over here a little band, right? That little band right there is a band of bulls. I'm very bullish. I'm bullish on crypto. I'm bullish on life. I believe things are going up. I believe they're going to continue to go up in most every way in my life, and I'm very blessed and very happy about all of that. You know, that's consider the glass half full and half empty scenario. Um, Bullish people are the half full people, and bearish people are the half empty people. So, anyway, that's what that's all about. And we describe a pattern if we see something going up, or a market where we see a bunch of things going up. Oh, this is a bullish or a bearish, pattern. So that's the movement. That's the terminology. Now, what we're in right now is neither one. So let's talk about where we are right now. And this is just June 7th of 21. This will change very quickly. But let's take a look. Let's take a look at this. So, go over here. And okay. So you can see this pattern, and I'll blow up a section of it here. And you can see this is the current Bitcoin chart. You see that this is Bitcoin versus the US dollar. And there are patterns here that I want to point out. So this is our terminology. You see this run up here, lots of green candles, a spike going up from about 21 to up in the 40s. This is a doubling. This is super bullish. This is a super increase. This is back at the very beginning of 21. Okay, this is a couple months ago. Then you see this pattern with red as it kind of drops. It's not very bad, but it's a little bearish here. And this is kind of almost flat in a way. So a little bit of consolidation, but it was a little bearish scare, but it was really a little consolidation. Consolidation is where things are leveling out into a range. But then you'll see as we're sitting here in the low 30s, all of a sudden put out. And when you start seeing very large candles like this, okay, I just realized this might be under my picture. That would really be awful if I was doing that to you guys. Let me check and see real quick. It should be okay. should be able to see what I'm talking about. All right. So this is a very bullish, beautiful rise, almost doubling. This is sort of a consolidation, but a little bearish. And then we explode like this. Now, these very large candles, when you see large candles like this, it indicates a trend and a pretty significant movement. This one is a very bullish trend, a beautiful rise. We have a little drop off here. This was a few days, and I'm on a one-day chart. So each of these candles represents a day. That's what this stuff up here means. When you see something, it'll say 1 hour, 1 day, 1 week. That's what each of these candles represents. You're assigning a value to a candle. Okay. This drop right here scared a lot of people, but then we went back up again. This is obviously a range and consolidation happening here. But we end up at our all-time high of 64.9, so 65,000 right here. Then there's this drop. And this is all red candles, some of which are pretty good size. This right here is a extremely bearish time with a significant drop in value. And then we had a little recovery, and then we drop again. Now, so that covers bullish and bearish, and that covers the ideas of analyzing your charts. You'll see volume at the bottom. So this is a lot of volume. This is a lot of people getting out of the market quickly because they see the bottom falling out here. And so this is a lot of volume and a big red candle with a very low low. And this is a bad day. This was looks like the 18th of May. Now, what we're in now is not bullish or bearish currently. We've got ourselves several weeks, okay? So this is basically 6, 7, and going all the way back to 518. So we've got ourselves a good 3 weeks of this. Now, there's tools on all these things, and I'll draw some trend lines for you so you can see this. And I'll just make it like, a blue color since this is green and red. Okay. So if you drew a line like this, all right, hold on a second. Like, let's say you put the line across the top. And I'll drop this down a little bit. But let's imagine that you were doing that, right? Somewhere like that is your top, okay? And then this is some pretty good spikes down, but we draw a line something like this for a bottom, okay? And what you see is this zigzagging pattern where it's going up and down inside of this. And it's getting tighter and tighter. And you see how the candles are very small, right? So you've got small candles, and you've got a red and green, and you've got zigzags. They're going from larger candles into smaller candles, you see? Okay, so this is low amounts of trading. It's a very stable area that runs basically from the low 30s to the high 30s, okay? Let's talk about some terminology since we're dealing with the idea of, our vocabulary. Let's talk about some terminologies. This is what we call a range because it's ranging between these two values. What we call these two values are resistance and support. Support is the low line. It's where it's supported and it jumps back up. Resistance is the top line where it's hard to break through. So it resists it. Okay? Support and resistance. Support is established with a series of lows, okay, and it could be obviously going up or down or any direction. There's all these different types of flags and patterns, okay? But a support is an area where when the price drops to that amount, people begin to support it. They begin to buy in because it's a lower price. Resistance is when the price goes up to a certain level, people begin to resist it, thinking that, well, it's not going to be able to go much higher than this. This is really the value. And so the purchasing slows down and it gets resisted, and so it drops off, goes down, and it has support, hits the support, people start buying in, and it starts going back up. When this is happening in a straight line, zigzagging like this, up and down, we call this a range or trading sideways. See, if you're doing these type of things, you're trading up and down. You're going up or down. You have a very serious pattern. This is a pattern up, a pattern down. These are very serious patterns that you're tracking. The prices are falling. The prices are rising. It's time to pump. It's time to dump, blah, blah, blah. Okay? But when there's a range going on, it's called trading sideways because it's just going in a line. Okay? It almost wants to flatline. You can see what's happening here as it gets tighter and tighter. It's almost like flatlining. Now, what's going to happen at the end of this pattern is what's called a breakout. And this is another sort of terminology for you. So, a breakout is where you're going to break out of the pattern that you're in. Now, if you're going one direction and you break out the other direction, it's called a reversal. If you go a direction and you break out in the same direction, it's called a continuation, and you're in the same pattern. So this region is called consolidation. It's consolidation, and consolidation is not always bad. It's usually providing us a good support level for the future. One of the coolest things about support and resistance is that if you do it for a long time, you create a pattern, and if you break out of support and resistance to the positive by going up, a lot of times that old resistance becomes your new support. So think of it like this. It's steps on the way up. Let's say you're going to go from a product that is worth $10 a coin to a product that's worth $10,000 a coin. A lot of times this is going to happen in steps. You'll rise, it'll test its limits. It'll say, okay, here's your support, here's your resistance. It'll consolidate, then it'll go up again. People have faith in this project, faith in this coin. It goes up again. Then maybe it consolidates a little bit, right? Consolidates a little bit. And then maybe it goes up and down some, but then it goes up again. Think about this as steps. So you have support and resistance, but then you go up, and the previous resistance becomes your new support. And that's a great thing to see. That advancement going step by step by step is really a way that you can analyze over the long term a trend. So it might not work as well for a day or two, but for months you can see something stepping up. So if you went back and looked at a chart for Ethereum or Bitcoin or whatever over the past year or two, you would see all these steps as it went higher and higher and higher. So that's terminology. This is basic vocabulary. So support and resistance, patterns, bearish and bullish, consolidation, trading sideways. These are all things. So now when you watch the videos, hopefully you understand more as you watch different analysis and you do your own analysis. Hopefully you'll begin to see more and more about exactly what this looks like. So if you were to look at these charts, hopefully you can understand what's going on. And as of today, in this pattern, we're trading sideways. We have been for several weeks, and this is a consolidation trading in a range pattern. We're waiting for a breakout. We're hoping that breakout is a bullish sign, breaking out in a positive bullish way and climbing to new all-time highs. If it breaks out in a bearish way and it goes down more, then we're stepping down again and we have another bearish pattern, and it could end up being a long-term bear market. So I'm hoping that all those terms now make sense to you. And as a crypto analyst or crypto trader, you are better equipped to understand the vocabulary, to understand what candles are, what patterns are doing. And if you have any questions about any of that, please just smash that stuff down below. Ask me questions. Please do like and subscribe and put notification bell on. And please ask me anything, anytime down below in the comments, just or send me an email, as you can see down below, drchefscrypto@gmail. All right. Thank you very much. That's our update for today. And this is Dr. Chef signing off. Thank you.